What is up? Good morning. Happy Friday. Happy Friday, everybody. Hope you're doing well. Morning. Glad to have you guys here. Thank you. I am doing well. I'd be doing a little better if we had some real price action today. We've only had really one setup. I'm going to share my screen with you guys. But as to be expected, guys, Friday after FOMC, pretty choppy, right? Happy Friday, AZ Sunshine. What's up, Plug? What's up, 1000? Yeah, I mean, we expect price action to be like it is today. So there's only been really one thing I've seen today that actually would have offered a pretty good setup, but the entry I wasn't there for yet. I wasn't on my charts yet, but we can see this 15-minute bearish breaker that we formed on a London high. So we formed this high, this low, this higher in a 15-minute time frame, displacing this low, forming a unicorn setup. Which, guys, I just put a video out on my YouTube. I don't know if you guys follow me on Instagram, but I sent that notification on Instagram. I put a video up on YouTube about this exact setup and how to take it, what to expect. So this is that setup. It's where you have that fair value gap inside of a breaker, right? Overlapping a breaker, which on the 15-minute, we see this fair value gap. We see how price came up into that fair value gap and then came back down. But obviously, since price is so choppy today, we didn't really see that full follow through down to our lows like you would expect. Like these lows, we're pretty much doing what we've been doing, where we just kind of form a bunch of lows and we kind of just chop in this range for the whole day until like maybe the end where we just break out of it. So we'll see what happens. The only other thing I was looking at for shorts is this 5-minute inverse, right? If the shorts were gonna follow through and continue, I would have wanted to see them bounce off this 5-minute inverse here, but obviously that's not happening. We made another lower high or higher low, so just so choppy, guys. So choppy. Again, this so far today, this would have been the only setup I would have looked for, but I wasn't on my charts yet, so didn't take it. But again, if you guys want to watch that video,
how to fix an issue where OBS is.
Where is my YouTube? Oh yeah, so you could go to my channel under coaches where it says JoJo and then it says recorded live sessions, and I'm gonna post it right now. Let's see. Let me post it for you. Okay, so I just posted that under my tab. So if you guys want to understand what a unicorn setup is, that video it's a quick 4-minute video, but it just kind of dives into that setup. But again, guys, I mean, look at this price action. Normally, when you see this setup, you would expect price to really expand all the way down, continuing. But look what we have here. We have this 15-minute order block. And we also are in a 4-hour bullish fair value gap that we formed during FOMC, right? So we have this big 4-hour that we formed during FOMC. So it's a big gap. You know, we could see price try to come down and fill some of this imbalance because it is a big imbalance. But we could also see price bounce like we're doing right now, especially when we form these order blocks inside of these big imbalances, right? There's still levels that we could bounce off of. Right, look at like the 30-minute. We have this order block here right around the same spot as that 15-minute. Right, so there's a lot of levels. This is really the only strong level that we would bounce from, or we'd come down maybe to the 50% level of that 4-hour before we bounce. But again, with price action this choppy, it's kind of hard to read the market. It's kind of hard to really find good setups with the right risk management. Okay, and that's why I said like the only trade I would have taken so far was that 15-minute order or breaker block unicorn entry model. Other than that, things don't look amazing. We're starting to get a strong pump here though. Strong pump from this level. So we came down and we took out our Asia low. Came back up, came back down, came back up, came back down. Alright, so we're just ranging between these levels right here. Yeah, that volume inefficiency, which is right here. Guys, so this is what you call like a volume gap right here. See how we closed this daily candle on Wednesday up here, and then we opened our daily candle on Thursday up here. So this is a volume gap, a volume inefficiency, which kind of plays the same way as a fair value gap, right? Because it is an inefficiency. So price will tend to try to fill that inefficiency. As you can see, price came down and almost filled the entire thing. And then now we're seeing that strong reaction back up. So that makes sense, right? Even though price action is choppy, that does make sense that we are seeing that happen. Especially because we have our 4-hour bullish imbalance. We have that volume inefficiency. We have this 15-minute order block. So a lot of support down here. A lot of support. So now we're coming back up into our breaker, right? Into our unicorn, into this fair value gap right here. So, you know, on a normal day, I might look to take this short if we came back up retested. But right now, after forming another higher low, bouncing off some, you know, some strong levels beneath us, I don't know if I would necessarily take this back short. The only way I actually would think about it is just because we are ranging back and forth so much. We could see like price hit this level, bounce back down to this order block, come back up, right? We could see a lot of that. But at the same time, we could also see price just start to expand, right? We wouldn't expect price to expand that crazy right now just because of the consolidating that we're doing. But we could still see that happen. Okay, so we formed this 1 minute bullish fair value gap down here. We're right around VWAP right now. Getting a lot of divergence between NQ and ES today. We can see that ES came down and swept our lows, this liquidity level. And I was looking for NQ to do the same thing, but we never did come sweep these lows, as you can see. So that is an SMT divergence, and after we see that happen, we saw price bounce back to the upside, right? So a lot of levels that are showing us possibilities of bouncing back up, and then we saw that happen. Okay. ES also formed this 1 minute bullish fair value gap. So we could see price continue up, but if we're going to continue ranging today, well, then price would probably trade back up into this breaker and then trade back down into this order block and then trade back up, right? So we could see a lot of that today, and it's very typical for those of you who have just joined. Fridays after FOMC can be pretty bad price action, can be pretty slow, pretty choppy, especially, you know, we also have a speaker, FOMC speaker at noon Eastern and at 4 p.m. Eastern, so in about like 15 minutes we're going to have an FOMC speaker. And normally people will kind of be afraid of that, but like on a day like today where we see very choppy price action, I honestly think it can be kind of helpful if you want to take a trade and you see a good level, because it can really just accelerate price to those levels that we already have charted out. And give us an actual opportunity to take a trade. But again, today is probably a day where I typically stay out of the market, right? I typically don't throw any risk into a market like today, because what do I always say, guys? We always have more opportunities. Monday is a new trading day. Right, we're always going to have more opportunities, so why throw risk into the market when we have terrible price action and we're not seeing any follow through on our trades? Okay, unless you took a long here, right? Maybe you're probably seeing some follow through on your trade, which is good. Right, but besides that, And so basically, if you took a long here, or if you caught that 15-minute here down to these lows, well, then you probably got some follow through on your trade, and you probably caught a pretty solid trade. So this will be interesting. We just got a little more divergence actually. NQ sweeps the high here. I mean, price action now looks like NQ is trying to push past our breaker block. So, I mean, let's see. We might continue up. We might continue up. Or we'll get a strong bounce from this breaker and we'll head back down. Right, but I just, you know, even though I didn't really plan on taking... I don't really plan on taking a trade right now. It doesn't mean I... excuse me. It doesn't mean I 100% won't. But you have to have that mindset coming into a day like today where you understand that it could be for the better if you don't take any trades. You at least have to have that mindset. And then you can adjust if you do see a really solid setup where price action is actually good. Then yeah, maybe you could take a good trade setup. But besides that, you have to come into a day like today with the mindset that I'm probably not going to take any trades. I'm probably just going to be tape reading price action all day. Right? So there's no point in me putting risk into the market. Like, why risk? I just, it doesn't make sense to me. Why risk money on a day like today where you don't see any good setups when maybe Monday we have fantastic price action, right? And then you could have made double the money on Monday, but instead you lost a lot of money on Friday, so now you're trying to recuperate. You're trying to make back some of your losses from Friday, right? Nice price action is where we see high volume. We don't see chop. We don't see a lot of this like ranging where it's just up and down, up and down. We kind of see more breakthroughs, right? And we see like clear direction. We see clear direction. We see our levels getting respected. Right? We don't see price just being all over the place, going up and down, sweeping liquidity up and down, right? Like, what's it called? Sorry, I can't think of the word. But like seek and destroy, sorry. You know, like we'll see seek and destroy conditions where price is going, taking buy side liquidity, taking sell side liquidity, taking buy side liquidity, taking sell side liquidity, right? So that's like when you know it's not good price action. But when you know it's good price action is when you see like actual expansion days, right? Where price is expanding up to our external buy side liquidity, or it's expanding down to our external sell side liquidity, and you actually can find good entry models during that price action. My YouTube channel, I just sent it to my tab, so I had to create a new one, but it is at Trader Joe Trades. I had to make a new YouTube, sadly. Trader Joe Trades. But if you go to my tab, here, let me just share this video with you guys, so then you guys can go check it out. Oh, sweet. Thanks for doing that. Appreciate that. Yeah, so there's my YouTube right there. So if you want to check it out. So far I don't have too much uploaded. I just have some live sessions uploaded on there, and then I have that one unicorn breaker set up. But that's where I'm going to have my course posted when I post it, and that's where I'll be posting more educational stuff. And that's where you can go back and find all of, you know, just different recorded sessions from our live trading. Okay, so we're starting to get a bounce again from that level. You can see here we formed this 1 minute bearish fair value gap inside of our breaker. Price just touched off of that level. Thank you. Appreciate that. I do really like the logo. So we see how price bounced off of that level, coming back down to VWAP now. All right, so now we see, do we create a bearish breaker here, or does price come down and respect this 1 minute fair value gap and bounce back up, trying to displace our bearish breaker. Right now it looks like we're trying to create this bearish breaker here, bouncing off of our unicorn setup. I mean, look at that bounce right there. That's pretty good. Again, we have this 5 minute bullish fair value gap, so you got to be careful about that. If you are in the shorts, right, you would probably think about selling some of your position once we entered into this 5 minute bullish fair value gap. All right, those are like the levels. Those are levels I look to take profit on strong fair value gaps, strong order blocks, lows and highs. Okay, I mean, but this trade does look pretty good in the shorts. We just displaced this 1 minute bullish fair value gap. That's a good sign. So now you would see, okay, if we displace this, this would become a bearish breaker on the 1 minute time frame. And if we trade back up into this, you know, maybe bounce off VWAP, could catch a good short position. Now we figure out what would our risk management be if we took, see, that did not displace, so we have not displaced, we have not truly created this breaker yet. Okay, so we would have good risk management, you know, trying to catch down all the way to the lows would what you'd want to see, but on a day like today when we're not really sweeping our lows so far, you might, you know, you'd probably think about scaling in and out at different levels. So like scaling out, you know, taking your first TP in this 5 minute fair value gap and this 1 minute fair value gap, and then, you know, maybe looking to just take full TP once we reach down to this level, you know, like down to this level, like the order block, instead of waiting to break lows. On days like today, it would be more of like, it would be more trying to scalp the market. This is a market where you kind of have to scalp. Okay, so what I would wait for is for this candle to close below. So there, it just closed below this level, but it's still not showing a lot of strength to the downside yet. But again, if you're aggressive and you don't really care about this choppy market, this would be your short entry right here. Right, this would be your short entry right here. You could put a stop above the high, right, above this level. Again, we had this inverse 1 minute. We touched up into that inverse and started to head down. Right, I'm not taking this trade right now just because I don't like, I want to see more. I would want to see more follow through to the shorts before I got in that trade. Right, as you can see right now, we're not getting that follow through. We're still trying to push up. But, you know, we have this 1 minute order block, so we have levels of support. So I would want to see us close below, taking out lows before getting in a short position, right? 18504 to 508 would be considered an order block. Let's see. Yeah, like on the 5 minute. Yeah, like this right here, I would consider an order block. Assuming you're talking about down here. Yeah, all this level. Again, just no follow through on this yet, right? So that's why you haven't seen me take any trade. Like I said, if you're aggressive and you don't really care about the chop, you could get a short entry, but our order blocks are more consistent than fair value gaps. It just depends on the levels. It depends on the levels because you can see both of them be very consistent. But again, you got to look at the higher time frame down, right? So I consider higher time frame fair value gaps and order blocks to be more consistent, right? Because we're thinking about time as being fractal, so we're trading price. We're taking trades based off of our daily bias or what we think price is going to do for the entire day. So when you see those higher time frame levels, those are the stronger ones. But I wouldn't say that fair value gaps or order blocks are more strong than each other. It just depends on the level. And it depends, like, do we have bearish or bullish structure, right? since we broke structure to the upside, I would say that this 1 minute and 5 minute bullish fair value gap is stronger because we have bullish structure, right? Yeah, I mean, right now, it's still looking like price is trying to drive up. It's trying to continue to the highs. And this is just why I haven't taken anything yet. This is why I have not taken anything yet. We got this long wick down creating liquidity though. You can see here we have these equal lows that we generated right above a fair value gap. That's a strong level of liquidity that we could probably see price trade down into. Yeah, that's funny. Right as I saw that right after I said that. That's exactly what I was saying. These equal lows right here above the fair value gap, I could see price coming down, taking them out, going to the fair value gap, right? So that's a good eye there. I'm glad you noticed that. All right, but again, price is still trying to continue up. So this is why you haven't seen me take any entries yet, guys. This exact reason. This is why you have not seen me take any trades. So now we have disrespected that 1 minute breaker block, right? We've now disrespected that 1 minute breaker. But we have generated liquidity down here. So we could still see price trade back down, trying to grab this liquidity right here. And I hope you guys see what I'm saying. When price creates equal lows, that means there's going to be liquidity resting below. There's going to be stop orders and there's going to be limit orders resting below this level. So this is internal liquidity, internal sell side liquidity. That's what you would call this right here. Okay, so we're coming back up into that 15-minute breaker, into that 15-minute fair value gap. All right, but on this 15-minute time frame, price does not look too bearish, does it? We still have like 7 minutes left on this, though, so there's still time on this 15-minute. But I mean, I'm sure there's tons of people right now that have been taking multiple trades that have been getting stopped out, stopped out, stopped out. Right, and I'm giving you ideas. I'm telling you, okay, this could be a good idea, but I'm also telling you I'm not getting in this trade because of how choppy price action is, right? Right, so I still like to give you ideas of trades I would think about taking, but when I tell you that I'm not getting in that trade, there's a good reason behind that, right? It's because I'm not, I don't have all my convictions in that trade. I'm just trying to show you guys levels that I look at while I'm trading. These are the models, the entry models I'm looking for, but it does not mean I take every single entry every time I see some kind of entry model form. Right, we got to have conviction. We got to see multiple convictions, confluence. Okay, so here we see SMT divergence. Again, ES takes out this high, NQ fails to take out the high. Do you use Fibonacci or think it's a necessary tool? Yes, I use Fibonacci all of the time. All the time. And you can see on my 15-minute, this is the Fibonacci here that I use on the breaker blocks, right, from that first high to the first low. And I'm looking at standard deviation. So on a normal day of price action, I would expect price to come down all the way to at least our first standard deviation, right? Excuse my voice crack. Going through second puberty. But you can see from this high to this low is where I use my fib, and I'm looking for my standard deviations as good take profit levels because they normally line up pretty well with our other PD arrays, right? But a day like today, we didn't see that follow through. But you can notice you don't always have to use the Fibonacci. It's just a good kind of tool to see different levels. But like, see how the first standard deviation is right in this 15-minute order block? Right, that's how you know, okay, maybe I shouldn't wait to take profit until we hit that first standard deviation. Maybe I should just take profit right when we touch into that order block. Right, so you're kind of just using these standard deviations as kind of confluence, right? Just seeing if they line up with our levels on like our PD arrays, right? With our order blocks, with our fair value gaps, with our highs and our lows. And a lot of the time, they will line up pretty well. How do you know where to place the Fibonacci? Yeah, so it just depends on what you're going for. So like on a breaker block, we have this first high to low to higher high. So I'm using my Fibonacci from the first high to the first low. The first high to the first low, that's how I use it on that. Now, let's say we're looking at our daily range. Like, say we wanted to look at our New York AM range. Okay, so now I would use the Fibonacci from the high of the day, right? But not from 5:15, because I'm looking for at least, right, 8:30 in the morning when our markets truly start to get volume. Okay, so that would be, I mean, all the way, where do we even start? Down here? Yeah. So that would be down here all the way to like here. Okay, so what we would expect on a normal day is, if this is our low of the morning, this is the high of the morning, around lunchtime we would expect, since we started down here, we traded up to here, we would expect price to trade back down into a discount before continuing our trend up, right? So that's another way I use the Fibonacci, right, which we did see price do that. We saw price start here, come up, come down, come up, form our high of the morning, and then we traded back down into a discount, and then now we're trading back up, right? So that's another way. Another way we could use our fib is off of our dealing ranges, which are going to be like our swing highs to swing lows, right? And it's kind of hard to use an example from today because we've had pretty choppy price action, but you could use it on our dealing ranges where, like, let's say we're looking at the 15-minute, okay? So let's say this is our swing high, this is our swing low. We could use that Fibonacci from our swing high to swing low, and now we're looking for, if our price is going to continue down, it's going to continue bearish, well, when we see high, low, we expect price to trade back up to a premium of that dealing range, right? So above a 0.5 level of that premium range before continuing that downtrend, right? Which is what we're seeing right now. We're coming back up into the premium of this 15-minute dealing range. So on a normal day, we'd want to see price continue down. Okay, so those are a few ways I use my Fibonacci. I think the Fibonacci tool is very valuable. I use it every single day. And the importance of SMT divergence. Yes, and this is another confluence that's not going to be, it's not going to be your 100% confirmation, but it is going to give you confluence and conviction in certain trades. Okay, so the importance is, we're looking at correlating markets. Okay, so we see ES and NQ, they're correlating markets. They typically move together, right? They typically move together. So when you see one of these markets moving a different way than the other, like let's say we had a target of liquidity resting above, and ES comes up, takes out the liquidity level, NQ fails to take out that liquidity level, but it's showing strength to the downside. That's when we see that SMT divergence between the two, and ES went up, grabbed that liquidity. NQ is just showing strength to the downside. It doesn't even want to grab that. So that's another conviction that we have, where it's a conviction of reversal in price, right? So it can be helpful to understand when a reversal is truly going to happen. Doesn't mean it's our only indicator. No, we just use it as confluence to understand if I'm expecting a reversal at this level and I see divergence between the two, then that's just telling me, okay, I think we have a stronger possibility that price is going to reverse at this point. All right, yeah, so Fibonacci I do use for entries and exits, but again, it has to align with my PD arrays as well. It's just kind of it's a good tool to help me figure out my levels. Okay, so price is continuing up. We're continuing this bullish trend, but on internal liquidity, I'm still checking out. I'm still looking at this level right here. This is a strong level of internal liquidity. We have the strong bullish fair value gap. So I'm still checking this level out, right? I still believe that the shorts could come back down and take out that level of liquidity. Okay, so we're back, right? We're in this bearish breaker, we're in this bearish fair value gap, still respecting the fair value gap, still respecting the breaker. Okay, so this is what you have to be looking for every single day. You have to be looking for where's our liquidity and what is our market structure. If our market structure is bullish, which right now we're seeing a 1 minute bullish trend, well then, okay, let's start looking for our bullish, our buy side liquidity, which we can see right here at these highs. We have liquidity relative to equal highs right here. Okay, so we do have some buy side liquidity. Okay, so if price is continuing, that would be our target. Our first target is right here. Okay, which is what price is going for right now. On a sell side, right down here, we generated equal lows here. So this is the liquidity I'm looking for here, and I'm looking for liquidity at these lows on the sell side. Okay, so you have to be looking for where's our liquidity every single day. Every single session, you got to figure out where is our liquidity. What is price action? What is price trying to go take out? Right? What is our point of interest? What's our target? The EMA. I used to use EMA. I haven't used EMA in a long time. I only use VWAP currently. But I know the EMA can be very helpful. Okay, so now we just disrespected this 1 minute bearish fair value gap. We're at the top of this level. Okay, so this could be considered an order block up here, right? And if you're a supply and demand trader, this would be a supply level on the 1 minute time frame, because we see this order block candle here and then a strong bearish candle. So this indicates an order block, which could be a strong level of resistance, right? Which is why I hate when people try to argue and say that supply and demand sucks or ICT sucks, or that's so wrong, because guys, we're using some of like very similar ideas. We're just looking for different entries. We're just looking for different entry levels, right? But it's very similar ideas. Okay, so we have liquidity resting right above this order block. So is price going to try to grab that liquidity, or are we going to bounce off that order block? All right, I'm not one to guess the top. I'm not one to guess the bottom. I'm one to wait for confirmation. So like again, if we came back down and we traded below this level, I would consider this a breaker block, a bearish breaker, and then I would see if price trades back up into this level to take short. But if price continues to trade up, I would expect us to come take out liquidity above, right? And then maybe even continue higher. Just because we have VWAP does not always mean we're going to reject off of that. But it is another confluence where we see, okay, well, we have VWAP, volume, weight, and average price, right? Where price could come up and it could reject off of this level. How do I get so confident locating the liquidity level? It's screen time. A lot of screen time, a lot of back testing, right? It's watching price action for hours and hours and hours, understanding that price isn't just moving to move. Price is moving with an objective, right? There's a narrative in the market. It's not just moving to move, it's going to these liquidity levels. Because why would it go to these levels? Well, if there are actually truly big buyers and big sellers in the market, then they're going to try to go take liquidity where it's resting. They're going to try to go buy up everybody's orders, right? They're going to try to buy up your stop orders, buy up your limit orders, and then reverse the price, right? Or if you think that everything's an algorithm, it's the same idea. If it's an algorithm, then it's going to do the same exact thing. It's going to try to go take out all of these retail traders stop loss orders, all these retail traders limit orders. It's going to try to grab that liquidity because they're going to buy your orders and they're going to reverse the market, right? So they're going to take your money and make money. That's why liquidity is so important. So yeah, right now, just kind of watching price, right? It's still trending up. Again, if you were in the longs, and you could have continued this trend and continued to trade this trend upwards, right? Me personally, I'm not really looking to take any longs currently. And the reason for that right now is because I don't want to get into a long position when we're at the top of our bearish breaker block, right? And we're in this bearish unicorn entry model. I'm not going to long from here. That's just not what I'll do. Right? Just like I probably wouldn't look to take shorts when we're all the way down here, when we're seeing strong bounces from this level multiple times. Right? I would try to short from here and probably try to long from here. And since I didn't long from here, I'm not going to try to get in at the top. Okay, there's that strong drop there. So we might form another unicorn entry model on the 1 minute time frame. Right? If we close below, we have this fair value gap above. Price could trade back up into this and then continue down. But again, you want to see price actually continue down. But we have this target liquidity down below. So let's say we got an entry here. What would our risk be? We could have pretty good risk management. We could even keep a stop at 50 ticks all the way above this fair value gap here. We could give price room to come up here. But right now we can see price is still not trying to form that breaker block yet. It's still kind of trying to push up. All right? But we could have good risk management if we got an entry here. Say the shorts wanted to come in. We take first TP at the break of these lows. That's above a 1-to-1. You could even, have tighter risk. You could even play 40, 35 ticks, 30 ticks above this level. And you could have, like almost a 2-to-1 risk to reward on this trade. This is kind of what I like to see too, is see how we just formed that strong bearish candle and then we created this order block. This shows me this is going to be a strong resistance level right here. If we close below this order block, this is going to be a very strong resistance level, how we have a breaker and an order block right here. Like this level right here is going to be a very strong resistance level. All right, and I could keep a stop loss all the way up here if I wanted to at 50 ticks, even with an entry all the way down here. But again, price is still, okay, so now price disrespected that. So if we trade back up, I'll probably look to take it short, keep a stop at about like 45 ticks here. But we still actually didn't close below, which is one thing that I'm looking for. We only wicked below, but I would want to see a close below. 5 minute looks nice. We do have this 5 minute bullish order block though, is something you got to look out for as well. Okay, that's what you want to see. Although we're not in on this trade yet, this is exactly what you'd want to see here. Okay, so now I'd want to see price close. I want to see this candle close, disrespecting these lows, displacing these lows, and then I'd want to see price trade back up into this level to take short. Now the one thing, if you want to be cautious, is maybe look out for this 5 minute order block, because we could bounce from that 5 minute order block. But the risk management on this trade is pretty solid, and if I, even if I ended up losing this trade, well, I wouldn't be upset because the risk management is there. Yes, I mean under the wick, right? So now we saw this candle displace. Now we're not really being given an opportunity yet to get in this trade, but if price trades back up into this level, well, then the shorts would look pretty good from there. You could even wait for another 5 minutes for this candle to close, creating this 5-minute fair value gap, right? If you're very patient. So let's see if price trades back up. Again, I don't want to get an entry off an aggressive bullish candle. Right, I want to see a reaction off this level. If I see a strong reaction off this level, then I'll look for a short, but I'm not going to get an entry off of a strong bullish candle. See, like that. Okay, so I just got an entry in the shorts. See how we stalled at that level and we started to show bearish price action? So 18,546.50 is my entry. Okay, so I could keep a stop loss all the way up to here and still have 45 ticks, right? And my take profit would still be like 60 ticks at these lows. Okay, so I only have gone in half a lot so far. I have not gone into a full position because I want to see a stronger bounce off that level. See how this candle closes here. Okay, I just got into a full. Okay, so the nice thing about this trade is my entry is 18,546. So even if I were to get stopped out, I have very good risk management on this trade. I'm going to move my stop down. I'm going to keep it at 45 ticks here. 45 ticks at 18,557.25. Okay, and I have my first TP at 18,531.25 down at these lows, okay? So for me, this risk management is pretty solid. Even if I were to lose this trade, I would not lose much, you know, and that's for me personally. So like having 45 ticks all the way up to this level, giving us room to wick above is what you want to see here. But again, without seeing follow through and long wicks down, remember like I said, we have this 5-minute order block, so we could see a bounce from that level. All right, so still a riskier trade in terms of that, but I definitely, this is like the setup I would want to take. This is the only setup so far I've wanted to take because we are in the 15-minute bearish breaker unicorn. We formed another 1-minute bearish breaker inside of that. We formed an order block. We bounced off the order block. So the only thing that would stop this trade, honestly, would be this 5-minute bullish order block. This is the only thing that will stop this trade right here. And again, notice how I figured out my risk before I took the trade. Notice how I figured out my risk before I took the trade. And I understood that I could keep a stop all the way up here at 45 ticks. And it's not like I have a 70 tick stop all the way up here. Right, so I'm completely okay. I do think this trade is going to take out these equal lows. But I am completely okay if I got stopped out of this trade. I would be done for the day. And I wouldn't take any more trades. Okay, but this is the one setup I've seen so far that I do actually like. Okay, so now I'm just gonna kind of let it ride, and you know, obviously every time I get in a trade, it chops, so we got to expect that. The market likes to chop whenever I get into a trade, if you don't know. Okay, so we're coming down to VWAP. I want to see a breakthrough VWAP here. Again, I don't want to see a strong bounce from VWAP. I want to see us break through. I want to see us break through, close below VWAP, displace these lows, come down, take out this liquidity. There we go. All right, so I want to see us close below VWAP though. We've got like 13 seconds left on this candle. All right, I don't want to see a long wick up like that, or a long wick down. I want to see us aggressively close below. There we go. That's what we want to see. That's what we want to see. Okay, so if you had your stop lower, let's just say you want to really scalp this. We already have 40 ticks. Right, so you could have taken profit if you wanted to really scalp that hard. I want to hold down to this level. Again, we just closed that 5-minute. We still close inside of that 5-minute bullish order block, but that was a strong down close 5-minute candle. closing below VWAP on the 5 minute is a good sign. Okay, but if you don't like stalling, you don't like the choppy, slow price action, remember, you could always just get out and profit. You could always be done, call it a day, and be content, right? Again, I'm going to keep continuing to hold my trade. I'm going to stick to my plan. I still like this setup. I want to see us continue down from here. Even if we do come back up into this level, I could still see us bounce, right? So we're coming back up to break even now. And this is what you expect on a day like today. You expect this choppy price action. Right, and that's why I said scalping is the way to go. Right, but I still see this liquidity down here, and I still want to see price take out that liquidity. Okay, and that's why I'm still holding this trade. That's why I have not gotten out yet. Again, if you want to adjust your plan now, let's say price trades back down and takes out this low at like 41 ticks, you could take your profit at the break of this low. Right, you can move your stop down. You can move your stop lower. You can move it all the way down to here if you wanted to at 30 ticks. Right, I'm keeping mine at 45 for now. But there's a lot of different things you could do to adjust your plan where you could secure profit, you could minimize your risk on this trade. Right, like if you don't like this right here, which I don't necessarily like this right here, that's way too strong to the upside. Right, if you want to get out of that trade, you can minimize your risk. You could take out a contract, you could take out some of your position, you could completely sell when we're only down like 10 ticks, right? Or you could continue holding with your stop where it's at. Right, so you got to start to learn how to adjust your trade while you're in it. But you also have to understand that sometimes it's best just to stick to your plan. Okay, so it really depends on who you are as a trader. Do you like keeping and sticking to your plan? Do you like taking the risk? Are you way more risk averse? Are you more of a scalper? If you are, you probably took profit down here and you probably moved your stop to break even and you're probably not even in this trade anymore. And props to you. If you understand that's the kind of trader you are, then do that, right? Stick to the plan. Whatever kind of trader you are, stick to who you are. Don't try to change just because I'm doing something different. We all have our own trading style and we got to stick to our trading style. We got to stick to our plan. If you start to deviate from your plan just because you see someone else doing it, that's when you're going to get a little confused in your own trading style. You got to come up with your own style. You got to understand your own risk. We all have different sized accounts, so some of us are going to be scaling in heavier, some of us are going to be scaling in lighter. Okay, so like as you can see, I'm not stressed about this trade whatsoever. Even though we came all the way back up to here, I never even moved my stop. I'm sticking to my plan on this trade because we're still respecting that bearish breaker. We still have our target liquidity at our sell side. So I'm not worried about this trade right now. Okay, and even if I get stopped out right now, I'm still not worried. Okay, because I understood my risk before I got into the trade. I understood how much I was going to lose if I get stopped out. And I understand how much I'm going to win if I hit my TP, right? So that's why you don't see me stressing about this. You don't see me like, oh, I'm going to move my stop, I'm going to move my take profit, I'm going to do this, I'm going to do that. Okay? But you know what I've thought about doing, and this is because I understand now what price action is doing here, is okay, maybe I will move my stop down a little bit just because I saw this strong move up. I don't think price is going to come up to this level. Maybe I'll move it down. Or maybe because price is so choppy, maybe I'll move my TP down to this low right here because price is not showing me that it wants to come all the way down to this low. Right? But for now, I'm going to stick to my plan because we still have the strong liquidity level with a bullish fair value gap below on the 5 minute. So I still like this. I still like this position. You mentioned unicorn a few times. What does that mean? Yeah, I just actually sent out the video under my tab about unicorn entries. So So if you want to watch that video, oh wow. That was insane. Well, I'm out of that trade now. That was insanity. And again, that's the risk we take, right? That was, on a day like today, that's the risk we take by putting money into the market. Right? So, like I said, I'm not worried, I'm not mad about it. I'm not upset. I understood that I was taking this risk to begin with. Okay? So I liked the trade setup. It just didn't come to fruition. That's okay. You know, and I hope that you understood your risk management before you took this trade. Right, and you were okay with taking a loss before you took this trade, right? Because we got to understand our risk before every single trade we get into. So yeah, just aggressive Polish candle on that one. Right, the setup was there. I liked the setup, kind of like one of the only trades, probably the only trade I would have taken. The only trade I have taken, right? So it is what it is, right? Yeah, so, well, there it is. First losing day of the week for me. I'll probably be done. I'll probably be done for the day, honestly. I'll probably call it a day and get started on my weekend, right? Get some work done, but get started on my weekend. Just because after this trade, I'm like, okay, well, you know, I don't know if I want to keep trading. But yeah, we do have those equal highs that we formed here, and we have that fair value gap. That's why I moved my stop. That's why I had my stop up here, because I wanted to give myself room just in case price traded up into this level. But we just grabbed my stop by one tick, right, and then went up. So yeah, I mean, that's the reality of it, right? Again, our risk management was solid though. And I wouldn't have taken any trades today unless I saw a setup like this with really good risk management. So yeah, guys, I mean, that's it for me today, right? We went, you know, this is going to be my first losing day of the week, which, you know, it's not too bad. Not too bad. Not too bad at all. All right, but I hope you guys are really focusing on your risk management. I hope you didn't scale in full port that trade just because I was taking it. I hope you really are sticking to your risk management plan. And maybe some of you adjusted during that trade, right? Maybe took profit. So remember to stick to your plan, come up with your own trading style, start to understand what your risk is. Right? Remember, think, am I a risk-averse person? Do I like to take more risk? Am I more of an aggressive trader? Am I more of a conservative trader? Okay, and what I've realized over my trading career is that I'm more of a conservative trader. I still take risk because every trade you're taking a risk technically, but I don't like to take a ton of risk. Right? I like to wait for a lot of conviction in my trades. So that's who I am. But you got to figure out who you are. Okay, and that's why we do this, is because we're not just trying to give you live trade callouts, but we're trying to help you become an independent trader who understands what kind of trader they are, right? So this isn't just about live trading, this is also about education. Alright guys, anyways, enjoy your Friday, enjoy your weekend. Go watch some March Madness. Watch some basketball. Okay? You know, get some screen time in, you know, screen time. Do some studying, but also enjoy yourself. Alright guys, appreciate you all a lot. Thank you for joining up. You guys are the best. Love these sessions with you. Okay, we'll come back Monday and we'll kill it. Alright, we'll get back on it. Alright guys, God bless everybody. Stay safe this weekend. I will catch you on Monday. Peace.